As they say, there are only two guarantees in life: death and taxes. Same goes for capital gains tax. It is a tax you pay on the profit made from a sale of an asset. In today's episode, we will be discussing capital gains tax as it relates to the sale of a property in the UK and how to reduce your tax liability. Hi everyone, this is Ash Ajaz, and these are the answers to some of the most common questions as they relate to capital gains tax. Let's get started. You may be liable to pay capital gains tax if you sell a property which is not your home. These may include buy-to-let properties, business premises, land, and inherited properties. For jointly owned property, you will pay the tax only on your share. If you are a basic rate taxpayer, the rate will be 18% on the gains. As a high rate taxpayer, this rate will be 28%. Keep in mind that any capital gains tax will be included when working out your tax status for the year, which may push you into the higher bracket. You can work out how much capital gains tax you have to pay by using the link in the video description. Any property you sell in the current tax year, you will have until your next self-assessment to report the sale of the property. So, if you made a profit on a property in the tax year 2019-2020, will have to be reported by January 31st, 2021 and pay the owed tax. When calculating your capital gains tax liability, you can deduct the cost of buying, selling, and any home improvements. These include estate agent fees, solicitor's fees, broker fees, and cost of home improvements such as paying for an extension. However, normal maintenance does not count. In addition to your capital gains tax-free allowance of $12,300, you may be eligible for tax relief. Two most common are private residence relief and letting relief. Let's take a look at these in greater detail. You do not pay capital gains tax when you sell your main residence. However, you may be liable if you converted part of the property into flats, use part of the home exclusively for business, moved out of the property 18 months or more ago to another home, let out all or part of your home, not including a single lodger, while residing at the property. If you used to live in the buy-to-let property you're selling, then you may be eligible for letting relief. Currently, the amount of letting relief will be lowest of either the gain received from letting proportion, the amount of private residence relief you can receive, or £40,000. Keep in mind, you cannot claim private residence relief and letting relief for the same period. So if the property is let out at the time of sale, the past 18 months of ownership will qualify for private residence relief, not letting relief. Some of the changes to highlight relating capital gains tax are: for 2020-2021 tax year returns, letting relief will only be available for people who were in shared occupancy with their tenant. And for property sales in 2020-2021 tax year, the relief period of 18 months will be reduced to 9 months. So everyone, hope today's episode has helped you understand the basics of capital gains tax. However, it is best to consult with a tax advisor who can give you advice based on your circumstances. As always, please check out some of the other helpful videos on this channel, subscribe to this channel, and thank you for watching.